Hey everyone, welcome back to Corporate Decoder, where we unpack the secrets hidden in corporate filings. Today we're diving into a company that is changing its name while also shaking up how it handles shareholder redemptions. Buckle up because things are about to get interesting. Imagine filing your paperwork and seeing your company's name change like a superhero's alter ego. That is precisely what Inflection Point Acquisition Corp, IV formerly known as Blycroder Acquisition Corp, I, has been up to. They officially reported a name change and some pretty significant tweaks to their internal rules on the 21st of October, 2025. This filing, a Form 8K, is like a company's urgent bulletin board for major events. Think of it as the newsflash section for shareholders. It tells us about big things happening that investors need to know about right away. And for Inflection Point Acquisition Corp IV, the big news revolves around two key proposals that shareholders voted on. First up, they officially changed their name. This isn't just a cosmetic makeover, it signals a new direction or a new phase for the company. Following that, the shareholders also greenlit changes to how the company handles shareholder redemptions, especially when they're close to a business combination, which for these types of companies is usually an acquisition. The company is incorporated in the Cayman Islands, which is pretty common for many acquisition companies, and it is registered under commission file number 001-42392. You might recognize the old name Blycroder Acquisition Corp, I, and now they are formally known as Inflection Point Acquisition Corp, IV. Their principal executive offices are located in New York City. Their listed securities are pretty standard for an acquisition company. They have units, which are a package deal of one Class A ordinary share, and one right trading under the symbol BAC. Then there are the Class A ordinary shares themselves, trading as BAC, and the rights, which give holders a small piece of a Class A ordinary share. Trading as BACIA, all of these are listed on the Nasdaq stock market LLC. It is important to note these are ordinary shares with a very low par value, meaning their nominal value is tiny and their real value comes from the company's operations and any future business combination. Now, here is a key detail: Inflection Point Acquisition Corp IV, like many companies its size just starting out or going through a growth phase, has elected to be treated as an emerging growth company. This gives them some flexibility with financial reporting rules, which can be a bit of a double-edged sword. They've also opted out of the extended transition period for new or revised financial accounting standards. This means they are keeping pace with the latest accounting rules, which generally leads to more transparent financial reporting, but can also mean more compliance work. The first major event we need to unpack is the change in their foundational documents. Think of these as the company's constitution. The shareholders approved two big changes. The first was the name change, a pretty straightforward update. The second, and arguably more impactful, was an amendment to Article 50.5. Let's talk about the voting. For the name change proposal, the results were overwhelmingly in favour. Out of the total votes tallied, a staggering 27,386,302 shares voted for the name change. Only a tiny fraction, 125 shares, voted against it, and 15 abstained. There were 0 broken non-votes, meaning most shareholders who could vote did vote. This shows strong support from the shareholders for the company's new identity. This second proposal, the amendment to Article 50.5, is quite complex but definitely important. Essentially, it allows the company's directors to make it easier for shareholders to redeem their shares earlier, especially if it helps push through a business combination. This is a crucial mechanism for special purpose acquisition companies, or SPACs as they are commonly known. It provides flexibility in the winding up process of potentially combining with another business. The amendment was approved with 24,204477 for votes 160 against and 201 abstainers. Again, strong support, indicating shareholders are comfortable with giving the board more leeway in managing these redemptions. The extraordinary general meeting on the 21st of October was where these decisions were made. A significant portion of their shares were represented, showing good shareholder engagement. Specifically, over 81% of the company's issued and outstanding ordinary shares were present, either in person or by proxy. This level of attendance signifies that the meeting had all the authority needed to make these important decisions. The presence of 27,386,442 shares, which is a substantial number, ensured a quorum was met, giving validity to the shareholder votes. The documents that contain these changes are filed as exhibits to this report. Exhibit 3.1 is the amended and restated Memorandum and Articles of Association, basically the updated rulebook. Exhibit 3.2 is the specific amendment to those articles that we just discussed, particularly the change to Article 50.5. These are the legal texts that govern how the company operates and how its shareholders are treated. Signing off on this report is Michael Blitzer, the Chairman and Chief Executive Officer. His signature here signifies the company has officially documented these important changes and submitted them to the relevant authorities. Now, let's put on our real deal investor hats. Inflection Point Acquisition Corp. IV, or rather the newly minted Inflection Point Acquisition Corp. IV is making moves that are common for SPACs nearing their expiration or acquisition deadline. Changing the name suggests a desire to move away from the past identity and fully embrace whatever new venture they are pursuing. The amendment to Article 50.5 is particularly interesting. It empowers the board to facilitate easier redemptions at an earlier stage. Why would they do this? Well, for SPACs, a smooth redemption process is key to getting a deal across the finish line. If a deal is struggling or needs a final push, offering easier redemption can appease unhappy shareholders and clear the path. It's a strategic maneuver to ensure flexibility. However, this flexibility also comes with risks. Increased redemptions can mean less capital remaining for the target company, potentially affecting its post-merger growth plans. The high number for votes on both proposals indicates that shareholders trust the current leadership to navigate these complexities, but we need to watch how this plays out. Will this enhanced redemption flexibility truly facilitate successful business combinations, or will it lead to a significant drain on capital that hinders future growth? The lack of broken non-votes in the name change proposal is a good sign of engaged shareholders, but the amendment to Article 50.5, while approved, had a slightly higher number of against and abstaining votes, hinting at some caution among certain shareholders. Overall, this filing shows the company is actively managing its path towards a business combination. The name change is a symbolic step, but the tweak to the redemption rules is a practical one designed to grease the wheels of a potentially complex merger. For investors, it is crucial to understand the implications of these changes, especially how they might affect the capital available for the target company and the overall valuation post-acquisition. We'll be keeping a close eye on Inflection Point Acquisition Corp. IV as they navigate this critical phase. Alright, that is our breakdown of Inflection Point Acquisition Corp, IV's latest filing. What is your take on these changes and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.